So once again, the bears are on the hind foot. Again, they're capitulating as they have always done for the past 2 years. We also have a Tom Lee coming out and basically saying, hey, inflation is going to fall like a rock. I personally don't necessarily agree with him on that statement exactly. However, he has been right about the market since a year ago, and he is very intelligent in his regard to what he foresaw for the market. He also cites that we didn't think the market was going to do this when he was saying it openly, and we can also go back and fact check that. Yes, it is true. Exactly what happened is what he said. And subsequently, the market has rallied. So is it going to be possible that inflation is going to be coming down like a rock? Yes, it is. However, I do think this is a little bit of a fallacy, similar to how the bears have had their fallacy that, hey, just because I was right before means I am right now. But if we look at the chart, that's all that matters. Good morning or evening, ladies and gentlemen. Hope you're having a wonderful start to your day. And the chart continues to be in the bull's favor. As you saw with the title of the video, keep it simple. And we can clearly see that the simplicity is a bull flag pattern. We're basically just going sideways right now, forming a base where people are saying this is the consensus of the price, and thus the bears are not able to move us down lower. They did defend on Friday, and we are going to discuss what happened on Friday with the news and everything in the later part of the video. I don't want to bore you with that just now. However, we did have basically a large move on Friday, which subsequently sent the market into a new all-time high for a tick, but then fell down lower. However, that does not mean that all is lost for the bulls, right? Just because we advanced into enemy territory and then fell down subsequently because people didn't necessarily want to hold that risk through the weekend doesn't necessarily mean that we are truly going bearish. Again, we talked about the fear and greed and how it's starting to back into neutral territory rather than staying in fear, which is showing signs that people are getting more and more sentimental about the market. Market breadth is actually improving. We did go over this over the Russell, right? The Russell getting back above the 50 even on Friday, which it saw it subsequently crash down below, defended that level, and then rotated back up higher. This is showing that market breadth is continuing higher, which is showing that theory that we talked about in the last week in deep dive, that the broader market is going through a rotationary period. We can also see this on the heat map. If we look here, we can clearly see there's spots of red and green equal spreading throughout the market, meaning that this is most likely rotation and the validation of the S&P pushing up higher here. We can clearly see that this being a bull flag pattern like we talked in the beginning of the video. But first of all, guys, I do have a favor to ask. If you all could hit the subscribe button and have bell notifications on so you know when we go live, usually Tuesdays and Thursdays, 7 p.m. Eastern. Most likely won't go live this week because it's mostly a nothing burger week and there's not a lot of news out there. We do have Powell talking, which we'll get to in the later part of the video. But as always, thank you all so much for watching. And again, if you wouldn't mind hitting the like button while you're down there, it really helps the channel out. And check out the Discord that we have linked down in the description below. So enough about that. What is the market going to do? What are the levels that we need to pay attention to? Well, simply put, for the S&P, 542.44 again is that level that we're going to have. It is the new, let's say, bottom that we are formed. So it's technically a higher low and we have a higher high, but we don't necessarily have a hold of it. So we're still trending in the bullish pattern, and any attempt, I believe, at 550 again will result in a new all-time high break and close, just because the market is going to start advancing into that territory where the bears were going to capitulate. And again, we talk about net speculative positions capitulating nearly 50% of what they were. So that means good job, bulls. You're doing it. You're letting that bear fuel expire, and pain is going even as the market pushes down, right? They capitulated off this little move right here, and thus aren't able to hold it. They have a lot of remorse going back. Now, we did say that this could be possibly a head and shoulders pattern kind of forming here. Maybe if we see that continuation go into Sunday night with futures and subsequently Monday morning, then that pattern will be validated. However, I did say we have to break 542.44 before we even talk about that pattern being violated. For me, the rotationary point is going to be that 9-day moving average again. Right now, it's sitting at 545.64, and that's not too much of a move for the S&P from the closing of the day to there. We're talking about 0.26%. The S&P can move 0.26% in a heartbeat. Now, if we jump over to the NASDAQ, This is where the story gets a little more interesting. And I left the previous week's levels on here for a reason. And that's going to be because we really need to pay attention to those levels as well. As an important point now, we did have a new weekly low. So we're actually going to correct the low to basically 473 as the support. However, we want to actually keep the importance level on the previous week's rotation, which we broke above. We basically traded above 478.14 for quite some time, and actually that was the range of the candle essentially on Friday. Again, Nasdaq forming a new high by a tick, and then subsequently falling back down where the bulls were not able to hold it. However, we do have a lot more support now around 473.82, but I really don't want to see 478.14 be broken because that would invalidate the bullish continuation trend of higher lows and higher highs, and that's going to start putting into play forming a lower low, which I necessarily don't want to see. Maybe we defend around 476, but I don't want to deal in maybes. I want to deal in certainties, and if I'm above 478.14, then I'm looking completely bullish. I'm looking at that 486 break. I'm looking at that all-time high break on the S&P, all-time high break on the Nasdaq, continuation of the Russell, and also if we look at RSP for the subsequent days, it actually closed below its 50-day moving average. However, it's been chopping around quite a bit around this 164 level. So not seeing broader market sell-off, just kind of that standard rotation through the markets. And we do talk about NVIDIA, right? NVIDIA just kind of going sideways. So what's the first step in stop going down? Possibly one, go sideways, which NVIDIA has been doing. You really don't want to see 120 again on NVIDIA because that would insinuate further downside potential, forming an A to B pattern, bear flag to the downside. But again, if we look at these like high running assets like NVIDIA, like Bitcoin, and we actually can go to Bitcoin and see that it's forming something similar to NVIDIA, I would suspect Bitcoin to come down and break 56,000 and really come down and retest that 50,000K mark. That's where I personally would see support. Maybe the first buying opportunity around 56,000 for Bitcoin, but subsequently 50,000 is where I would look to be at. But then again, 56,000 is not necessarily a guarantee that you hold in that area. Please manage risk accordingly. And if we actually jump over to the VIX, which the VIX has been in a sideways action for quite some time, option pricing right now is definitely skewed to the depth side. So as we talked in the previous video about the option play, if the debit spread, what I said was most likely what I wanted to play, just because on the S&P didn't have as much movement, VIX was coming down lower, so you could have picked that up for pretty cheap, and the pricing was around the same point you are now, so it maintained its value around there. However, again, this is an area where if VIX is here, it's an excellent opportunity to be looking at debit spreads because they minimize the amount of theta you take. Yes, you cap your profits, but you can limit your risk exposure and manage it through the market. I do expect VIX to have a pop, especially with this week with Powell coming and talking and all the news events that are coming out. We can see that yields had a massive push on Friday, which kind of scared the market a little bit. Everyone kind of just said, hey, getting out of bonds and going into the market. We could have seen more propagation of that rotation, but pushing up those yields higher as we saw the data and the job numbers come out, right? Not giving the markets necessarily what they wanted of that euphoric reaction. We saw that push. And if we go to the yield curve, we can clearly see that the yield curve is starting to come back again sideways, pushing down after yields pushed up higher, the longer term pushing more than the short term. However, still having an inverted yield curve and not really doing much there. So recapping it for you guys, we can also look at oil, right? Oil, I did say was going to probably continue its bullish run, kind of a sideways stagnation of bullishness, having bear and bull crosses on the 50 and 200 subsequently. So we really need to see a defining break above 83 for oil to truly get back into that bearish swing of bullish swing of things, and a true break below 80 to give it that bearish tonation and close below 80 subsequently, because I would push the moving averages down lower. So right now oil is in a holding pattern where we have to see how it evolves, how the economy evolves. And there's a lot of like inventory fluctuation that are playing into that. So keep an eye on that. So subsequently, guys, we're going to actually jump over to the biggest winners and losers, and then I will be back for the debate section of the video. So I will see you in just a second.
And just as I predicted, nothing happened this week. As we can see here, guys, in the 5-day, markets really didn't do much, right? On the 5-day, it only went down 0.04%. Now, we did see a little bit of a spike here, pretty much the end, or I guess into the beginning of June 28th, but then it just slowly went down after that. Again, ending the day on Friday down 0.41%. Now, taking a look into the next upcoming earnings for July 1st, guys, there's literally nothing here. We only have, 2 days of earnings now. We got MSC on Tuesday, Radius Recycling and Simulations Plus also on Tuesday, and then one on Wednesday, and it's just Constellation Brands, which is actually a utility company. That's actually fairly interesting to see. So let's just jump right into the heat map because, again, there really isn't much of anything, and I don't predict this upcoming week to be much of anything either. So when it comes to the technology sector, guys, over here, the worst performer seems to be none other than the company. If I can actually show you guys, it is the company First Solar, losing 12.91%. And the best performer seems to be none other than the company Palo Alto Networks, gaining 5.83%. But all in all, guys, when it comes to the sector, honestly, very, very 50-50. The ones that did go down went down by a lot, like QCOM, Micron, you got SMCI. But all in all, kind of 50-50, honestly. Looking now into the communications sector, a lot of green here, right? A lot of green here. The big companies did go in the green. But the performer seems to be the company Disney. Wow, Disney's back under $100. I didn't even realize that. Okay, so Disney lost 2.91%, guys. Sub $100, $99.29. And well, the best performer seems to be none other than the company AT&T. Wow, only gaining 3.86%. All in all, though, this sector, there really wasn't much movement overall. Like, it wasn't a lot of big major movements. It wasn't anything in the solid green. Nonetheless, though, those were the biggest ones when it came to this sector. Now, this did change last week, and now we got the consumer cyclicals. And it's very easy to see which one here did the overall worst. I mean, yeah, Nike. Wow, after their earnings, that was awful. Guys, Nike lost 22.44%, current price of $75.37. Guys, if you haven't checked out my analysis when it comes to Nike, I believe I did it on a live stream. I'm sorry, but I did do it on a live stream. And I got that Nike should fall a little bit more. I believe I said to like around like $40 or something like that for it to at least be fair value, right? So it's interesting that it's already fallen down to $75.37. Let me know if you guys have used the discounted free cash flow or any other method to come up with a correct valuation when it comes to this company. And tell me what numbers you guys actually get for it. And now the best performer is actually the company CCL, Carnival Corp, gaining 16.49%. Companies like Tesla also gained 8.13%, as well as Ford 5.91%. Looking now into the consumer defensives, honestly, nothing really much happened here, as you guys could see. The worst performer seems to be the company Estee Lauder, losing 6.54%. And the best performer, oh man, there really isn't anything major here. It seems to be the company McCormick, gaining 3.29%. If we take a look now into the financials, wow, okay, again, nothing really much happening here. Worst performer seems to be none other than the company Visa, of all things, losing 4.63% to now $262.47. And the best performer, well, seems to be the company, if I can find it here, seems to be the company Synchrony Financial, gaining 6.12%. You have a lot of the regional banks gaining a little bit, right? You got 5.6. You got, well, actually, you guys can't even see that, but yeah, this one right here, Truist gained 5.6. But all in all, though, Synchrony Financial was the biggest mover or the biggest gainer in this whole entire sector. Looking now into the healthcare, a lot of red. There's actually a lot of deep red here. However, whew, man, the best performer, wow, that's a performer, all right. We got over here, though, the worst performer being none other than the, wow, okay, it's that one. I thought it was going to be Moderna. No, it is definitely Walgreens Boots and Alliance. Wow, guys, 24.26%. I mean, I don't know what else to say. I really just do not know what else to say when it comes to this. This company, it can't get it straight. It really can't. So tell me, are you guys buying into this company right now or not? Actually, would you guys like me to make a video on this company? Please let me know. And well, best performer, very easy to tell, by the way. UNH. UNH is back up, guys, above $500, $509. It gained 5.53%. Tell me if you guys actually bought it during that little bit of a crash that we just had a few days ago. Looking now into the industrials. Also a lot of red here, right? But it's kind of, I would say 50-50. And worst performer seems to be the company. Actually, I thought it was going to be this one. It's actually the company Pool Corporation, losing 9.05%. And the best performer, it is the company FedEx. They just had earnings, and look at that massive bump. I knew that was going to happen, gaining 18.2%. Looking now into real estate, a lot of green. Wow, this is actually the most green I've seen this sector pretty much, I think, to date. Worst performer here, it is none other. There really wasn't that much losers. Seems to be the company Extra Space Storage, losing 2.21%. And the best performer, once again, seems to be the company, Simon Property Group, gaining 3.86%. Now, the utility sector, again, 50-50. There really isn't much of anything happening, guys. Markets really didn't do much this week. Worst performer, ironically enough, is the one that has been gaining a lot recently. It is the company Constellation Energy Corporation, CEG, which, if I'm not mistaken, this is the one that's having earnings. This is the one that seems to be having earnings this week, losing 8.19%. And the best performer, actually kind of difficult to find, not gonna lie, seems to be, there really doesn't seem to be much here, guys. I don't know if you all can see that, but it's this one. It's PNW, and you guys really can't see that, but it gained around 2.37%. Now, energy, crude has actually been gaining a little bit, and, well, there's no losers in this whole entire sector. By the way, there's literally no losers in this whole entire sector. Wow. Every single company in the energy sector, it is up. Incredible. Absolutely incredible. Worst performer, or I guess not the worst performer, but the one that gained the least, would be the company EQT. Losing, if you guys can see that, you guys can't, man. So this company right here, EQT, only gained 0.03%. Sorry that you guys can't see it. And the best performer, it is none other than the company Baker Hughes, gaining 6.8%. But aside from that, guys, I mean, you could have not gone wrong at all this whole entire week when it came to the sector. And lastly, the basic materials. Worst performer, it is the company Air Products Chemicals, APD, losing 5.45%. And the best performer, it is the company Mosaic Company, gaining almost 4%. All in all, though, guys, I mean, don't expect much movement at all. These upcoming weeks. I get that we do have job numbers on Friday, but I personally don't think that we're going to get much movement at all up until earnings, as well as maybe even CPI, right? Until we get that, I highly doubt that we'll see much of anything. So, thank you so much for watching. Guys, that pretty much does it for this segment. Take it away, Mike.
So I think we'll just start off with the PCE coming in exactly where we expected it to come in, and the market kind of just being like, meh.
Yeah, no, I mean, I live streamed this as it was happening. As you guys know, I did have a live stream on Friday when PCE came out. And prior to PCE coming out, markets were around 0.5, right? Close to 0.5 of a percent all around. PCE comes out, no movement, zero movement. And I'm just like, well, wow. I mean, it came in within expectation. You would think massive rally, and it didn't. So, yeah.
You actually had the knee jerk to the upside and then subsequently went down. It was only till 10 o'clock came out where we got the consumer expectations and the sentiment that it actually went rocketing up, which was surprising.
And then it just kept crashing down, though, because the market did end in the negative on Friday.
Oh, yeah.
So it's like the euphoria that they wanted, they didn't get. Therefore, they just go and crash it. I mean, even when it came to the CME tool, by the way, they're projecting no rate cuts for the month of for the FOMC in July, which, by the way, it's in July 31st, about a month from now. No interest rate cuts. Guess what? There's one more FOMC. That's it. After July, which is in September, there's one more FOMC where they have to cut rates if they want to cut rates before the election.
Or even, I don't think they're going to get the confidence between then and now. Like, nothing, right. The data, if we go back to the PCE data, 2.6 is not 2%. Until they get down to 2.1, 2.2, they're not going to necessarily be, like, super happy with it. On top of the expectation that it's going to do that right? Because we were at 2.8 for a consistently long time on core. This is the first like welcome data point, and the Fed will most likely say this is a welcome data point, but we need more of it. So you need core, which was the most stubborn out of all of them. Remember, core PCE moves like a snail for a reason, and it subsequently is going to go slowly down. So maybe 2.6 is the next 3-4 readings that we're going to see, right? Like stair stepping down, but it's not going to be like 2.6, 2.5, 2.4, 2.3. It's going to basically go down very, very slow.
And let me actually add on top of that, right? Let's just assume that by the September 1, we are at 2.0, 2.1, 2.2, 1.9, right? Let's just assume that. Powell's going to come out and say, okay, we reached it. Now we have to make sure that we're here. Right?
Yeah, and cut very slowly.
We need no. It's that he's going to come out and say we need to be confident that we're actually here and that this is not just a blip to the downside, right? Because just as you have blips to the upside, inflation spiking one specific day or one specific month, you may also just have a instant crash 1 month on inflation, and then the following month is back up to what it was before. You get me? So they don't want to. I'm fairly certain that they don't want to have the knee-jerk reaction.
Pull a Volcker again.
Right, exactly. Where they hit it 1 month, and then they're like, oh, we hit it, cut rates. And then the following month is back up to like what it was before, and they're like, oh, no, we're going to have to raise it again, right?
Yeah, they don't want to go one way or another too quickly. They're basically being very meticulous for a reason.
Exactly. Here's the thing, though. That doesn't mean that that does not mean that we're not, the double negative there, that we're not going to get a pity interest rate cut like the ECB did, right? That was the biggest slap in the face to everybody in Europe when the ECB said, we're going to cut rates by 0.25%, and then they put out a tweet saying, but inflation is still prevalent. Really? Then
why did you cut rates?
Right. Then why'd you cut rates? So I don't think that Powell, well, we know that Powell's very, very, very foolish, if I use an intellectual word.
Yep.
But let me tell you, these upcoming months, and I said this on the stream, these upcoming months is really going to prove Powell's, I guess, loyalty.
Political nature?
Political, yes. Yeah. I was going to say loyalty to his political nature of being not unbiased, but unpartisan, or not partisan.
Unpartisan. Yeah, that's the word.
Right. Not partisan. I think that this is definitely going to test that, because if we get to September and inflation is still at 2.5, 2.6, and then in September, the September FOMC, he says, we're going to do a 25 basis point rate cut. It's just like, all right, we know exactly why you're doing it.
It was like the Bloomberg question.
Right.
I'm going to keep calling it the Bloomberg question of the century, where the guy's like, okay, so if you expect PCE to stay flat or exactly where it is now, or I don't know if it was PCE or CPI, why don't you cut rates now, considering in 6 months you're going to be at the exact same data point? And the answer was basically like, it was a nothing burger answer, or wasn't even answering the question. He just avoided the question. So it's like, to your point, that same question is going to be looming of, why did you guys cut rates now when you weren't confident 3-4 months ago?
Right. What changed? What changed when nothing has changed?
Thursday.
Right? but that's exactly it, right? It's like if they were to do that, if they were to cut rates out of nowhere, even though inflation hasn't changed, then what did change?
Yeah, politics.
Politics.
Gotta go save. Yeah, gotta go save your boss.
I gotta be honest with you. I completely drew a blank when you said Thursday. I just figured it. I just realized what you meant by that.
And the thing is, I think you need like 2-3 rate cuts to help you now. Like that was, and we don't get political on the channel for a reason, but that was just like just stop. Just stop.
Well,
it's literally.
Well, we do and we don't.
Yeah.
Right? Because you can't really. There are a lot of channels out
it.
there. You really can't, right? It's like the person that's about to be in the White House next year in 2025, once the person gets inaugurated, is literally going to determine the state of the economy and therefore the market. So
Well, it's
you
also
really can't avoid
interesting
it.
now, like, you know how we always speculated they have to keep like this political leverage up, where now seeing the performance on Thursday, do you ultimately pull the lever on the economy early in order to force the step down of the current candidate versus trying to prolong it in case like you pass the election, right? Like, is there a swaying in the momentum of what they want to do, considering most likely the candidate that debated on Thursday is going to try to stay in? And if you look at the shift in the media of how they went from like, hey, this is all great, fine and dandy, to basically 180. And a lot of hedge fund managers that have come out recently are basically saying there's going to be a large amount of volatility the rest of the year. We expect the market to basically go sideways into the election.
So about that, right? I was live tweeting when the debate was happening, and I was trying to like fact check here and there, but something I realized is that, well, for starters, obviously the winner of the debate was clearly Donald J. Trump, right? That was like very, very clear. But interesting to note that futures were up. Futures were up. And the one who clearly had the better performance was Trump. So if futures were up with Trump having the best performance, well, what does that entail something if he does win in November? Like, if he does win in November, are we going to see a massive spike in futures that night? Maybe,
or
maybe
you
not.
could see a down spike because it's like uncertainty, right? Changing of the guard uncertainty.
But it's not really uncertainty, though. That's the thing, because we know how Trump worked back in 2016 to 2020.
Yeah,
right.
break
So
all the toys.
it's not really uncertain. We're just gonna get more of the same as in back in like 2016.
Yeah.
So,
But
and it
again,
was a great time.
Before
So-
we go diving into 3 months from now, let's take a look actually what's going on this week. We did actually get net speculative positions capitulating a bit, so I'm happy for them, because the bears, like I said in the previous video, maybe they're back, but again, I look at this and I'm like, okay, you're still the same mentality of short this thing, don't get it all the way up, and then we basically go back to zero net speculative positions.
Yeah.
I'm saying that we're probably going to get a market run this week, especially with some of the data that's coming out. First of all, we got ISM on Monday to start off with, and PMI. Usually those, if they're in contraction or expansion territory, we see variation, and bill auction. So not too much, but again, I didn't say previously that Powell was being awfully quiet, and now we got Powell coming out on July 2nd, right before the holiday, to
Really?
give a speech, right? 9:30 on the dot, on market open. You couldn't have time and did better.
Wow. Yeah, there really isn't that much happening this week. I mean, aside from which we're about to get into right now, aside from job numbers.
Yep. And Fed minutes.
There really isn't. What was that?
Fed minutes as well.
And Fed minutes. Aside from that, there really is no earnings.
Yeah.
At all. So, yeah.
And you have an early close on Wednesday at 1 o'clock versus...
Oh, wow. Okay.
So we're actually going to get Powell's speech on Tuesday. Then when we go into ADP, right, they're expecting about the same going into it, along with PMI, factory orders, ISM. So just a huge chunk of ISM data this week that comes out in the beginning of the month. And Fed minutes are actually going to come out post-market close. So we're not actually going to be able to trade meeting minutes. However, they're not, in my opinion, going to show anything that's drastically different than what the Fed has already been talking to you. And if Powell does I'm not really going to talk about it on Tuesday, we basically know the Fed minutes aren't going to move anything, right? So if he's seeing that the dynamic is going to change, he's going to come out and give you the, hey, look at this way or that way. He's not going to really try to shift the boat, right, if it's not in the right direction.
Yeah.
And then Thursday holiday, and the market is closed, with Friday being the big kahuna day.
Yeah. Well, at least one of, right? One of.
Yeah.
We already have expectations for this. You guys can see there on the non-farm payrolls. We're at what, 189?
Yeah, so essentially the same expectation like last time.
That's what I thought too. I'm like, didn't we just see that last month? Yeah, it's the same. Wow. And last time it did beat by a lot. I mean, you guys see it right there, 272,000. So here's the thing. I personally don't even think that this will move the needle much at all, right?
No, jobs is such a lackluster event now that it's completely lost any of like significance.
Correct. The one that is going to move the needle is what's happening not this upcoming week, guys, but the following, which is CPI. Yeah. So that I think is going to be the main one. That always is the main one, right? It's like I always make the joke is like this CPI is the most important one until that one hits, and then it's the next one that's the most important one again. Yeah. So it's it's just it's always like that.
But it is the last major inflation data the Fed will see before their meeting, right? Because they're going to see PCE again, they're going to see PPI, but really CPI is going to be the one the market focuses on, as we've seen with PCE being kind of like super laggy, and thus it's not really going to drive much, in my opinion.
Right. I personally think that with this upcoming week, now from the 1st to I believe the 8th, not the 8th, what is it, like the 6th or something? We are probably not going to get any movement in the markets.
Yeah, and especially with bank earnings on the horizon.
Yeah, right. Well, bank earnings is, I believe, towards the end of July, if I'm not mistaken.
Yep.
So I think CPI is the main driver here. Up until CPI, there really isn't going to be that much movement. And after that is when things are really going to start hitting the fan, because not only do you have CPI, you also have earnings, you also have PCE, FOMC. So towards the end of July is when we're going to see the ball start rolling a lot more. So let's just jump into now the fear and greed, and let's see. We are pretty much.
You're almost out of fear. You're almost out of fear, and that's what I'm saying. There could be a rally this week, because now as you start shifting to neutral and greed, you could have a rally.
It could honestly just end in neutral, right? It could honestly.
Well,
we're threading that needle.
We did close neutral on Thursday.
Sure. Okay, fair enough. But we're literally just threading that needle at this point. Yeah. And I don't think we're going to get anywhere. I think we're going to stay at neutral up until CPI, and then after that is when we're going to hit either one or the other side. So
I think we're going to see greed this week. That's where I think
we're going to see greed. Yeah. I think it's going to be neutral.
Right.
But guys, I think that will pretty much do it for this video. Make sure to like, subscribe, comment. Really does help out with the algorithm on YouTube as well as Rumble. Make sure to follow us on X at Fatal Investing, and follow us on the Discord. By the way, it did expire. We're going to have to redo it again for this video. So I'll make sure to put that before you put this video up, just so that way it's the automatic description. So yeah, in regards to the live streams this week, I don't know if we will have any.
We could do really Tuesday with Powell talking, right? If there's something that comes out with Powell, but it's going to be contingent on Powell moves market, right? If the market kind of just says meh, it's going to be like, you guys you're heading into holiday. Enjoy the time with your families. Obviously, Thursday is a holiday, so we're definitely not streaming on Thursday.
4th of July and Independence Day.
Yeah. So go shoot some fireworks. Stay safe. Don't do anything stupid like hold a fire.
I'll put out a video just because I like putting out a video during the holidays, because I find myself that I'm with family and I'm bored. So I want something to watch.
Gotcha.
So I will be doing that no matter what. But yeah. Enjoy the holiday. I don't know if we'll have any live streams. Just be on the lookout. Subscribe to the channel. Smash the like button, of course. Smash the bell. Hit the bell for the notifications, because if we do have a live stream, that way you guys can be notified by it. So, yeah, guys, I think that'll pretty much do it. Thank you so much for watching. Peace out, and we will see you all next time.